The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the March 30th magnificent Monday edition of today's opening bell on the Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a fantastic weekend. I know I did. Great to be back with you. Let's make sure that you and I, that we get everything out of our day. Let's have an extraordinary day, of course, an extraordinary week. And the easiest way to do that is to always remember that life happens for us. That's right. It happens for us, not to us. When you and I, we make that little 2x4 exchange out there, what it means is that you and I can find the gift in every set of circumstance that life is going to throw at us. And that's really the responsibility of life. Just like in these markets we trade, it's the responsibility of the bulls and the bears to go ahead and throw everything they can at you. And it's important for us to be able to find that gift. That's what we're going to do here for the next couple hours. And if you'd like, I'd like to give you the gift of my opinion on whatever it is that you're trading out there. Let me help you. Let me assist you. I'm absolutely here to serve you, and I'm grateful for your presence here today. Of course, you can always give me a call at 877-927-6648. Internationally, that number is 727-445-1044. This is Magical Monday. Of course, none other than the magical Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we've got Dow Futures trading up 138 points, trading out at 17,764. S&P Futures up 11 at 2,064. NASDAQ up 27 points at 43.53. Russell 2000 up 7 points at 12.41. The King is on the move this morning, up 665 ticks, trading out at 98.18. So we've got some movement inside the currency market, the pound, the yen, the euro. So we'll take a look at those. The hard currency market's moving as well. Goldilocks back $18 right now, trading out at 11.82, on its way into that 11.70-ish type range. Silver down almost 40 cents, trading out at 16.68. Light sweet crude trading under $49, trading at 48.46. Natural gas up a tad this morning. A quick peek across the globe out here. Green arrows everywhere. It will be difficult for our market to not be green. And of course, those of you that have been listening to the show, you know that last week I was calling for the market to make a choppy move. It was very choppy out there, choppy to lower. And I indicated that the markets were in the process of forming their next bottom. And I said, well, you know, it should come in on Tuesday. Looks like I've missed it by a couple of days out there. But the bottom, it looks to me like that bottom is inside of the market. A quick peek across the globe out here, and we'll see the markets move higher through the month of April into that sell in May. Then we'll get a little bit of agitation out there. We'll get that, everybody talking about the sell in May. And that's an opportunity, really. For you. It's an opportunity to go ahead and protect some profits out there. It's an opportunity to get ready for the next buy, maybe even go ahead and short the market for a short period of time. But the markets will, again, then move higher into the July timeframe. We'll have some nice July fireworks out there. And then you got to start to be careful out there. That's the prognosis. That's Dr. Love. That's Dr. Stevie coming at you with regard to what it looks like the markets are going to do. Shanghai last night up 100 points out there. The Hang Seng up 368. The Nikkei up 125. The Shanghai up about 2.5%. The Hang Seng up 1.5%. Nikkei up about 0.6% in Europe this morning. DAX is up 167, up 1.4%. The FTSE here, let's go check in on the FTSE. Let's go see it's tackling. We know what the FTSE's doing. It's trying to break out above that 1999 high out here. Hasn't been able to do it. Did it last week. This is a daily chart. The number that we're watching here inside the FTSE is 69.50.60. If we can see the FTSE break above that, then we'll have all cylinders on go when you just simply go across the worldwide markets out here. If we take a look at the DAX just to see what it's doing, it's trying to make its way back up to its highs out here. Those highs coming in back on March 16th, March 17th. Once it gets above that level, then the DAX's next target becomes 12,695. Right now, it's at 12,036. Nothing but a nice bullish move, continuation move inside of the DAX underway. If we take a quick peek and go back and look at the Asian markets out here, let's look at the Shanghai. The Shanghai here is Shanghai basically is broken above its 2008 resistance level at 36.55. That says that its next projected price move is in the 46.42 level. You're at 39. It closed at 39.68 last evening. A quick peek at the where are we at here? Come on, where is it? Right in front of me. The Hang Seng. Hang Seng closing up 368 points, running right into resistance, real close to it. The resistance level that I've got marked here inside of the Hang Seng is at 24,988. Now, it gapped up into that level last night, got to a high of 24,949, so about 50 points shy of where it really needs to go. And if it gets above that level, then it is, it sets up an A to B equals C to the upside. A little shooting star candle, actually, that formed here on the trading session of February 27th. Just the opposite of that hammer candle. That really becomes the resistance area. If you see it close above that level, 25,101.96, that's going to set up your A to B equals CD to the upside. And that's going to go ahead and take price, and this is, it's going to be a doozy out here. That's going to give you a first target of 26,249. More likely, 26,948 would be the number that I would be looking for at a minimum, and that is inside the Hang Seng. Just needs to clear 25,101, and then it will be all systems go. It's kind of the case of the Nikkei, and then we'll go take a look at the yen itself. The Nikkei here, it's 1-to-1 A to B equals CD takes you to 20,094. It'll make that run, and then it'll make the run up to 21,046. Those are the price targets inside of those markets. With regard to our markets, if we come back and we take a look at it, we'll take a look at the futures contracts here. Let's go take a look at the NASDAQ. The NASDAQ, which was weak. The NASDAQ, the Dow, all being a week last week out here. The key levels to be watching inside the NASDAQ, we'll come up with a couple levels for you to keep an eye on. Inside the futures contract on the daily charts out here, 43.8980. That's your TAS market profile high. So that's the first level. You get above that, then we're going to be watching the target of the B point of the A to B equals CD to the upside, and that's the March 2nd high. And that's at 44.7650. You take that out, the run to 47.19 becomes the next target, but more likely 48.38. So the clearing level that the NASDAQ's got to get through the clouds are 44.7650 and 43.8980. That's what's going on inside of the NQ. If we take a look at the S&P, really trying to do the same thing. The S&P has been, in essence, consolidating here ever since the February 10th time frame. That consolidation runs from 2,035 to about 2110. So what is that? That's a 75-point move. Add 75 on top of 2110. That gives you a 21.85. That becomes your target range when price closes over 2109.75. Right now today, we can see on the daily chart, it's run into that TAS market profile high at the 2068.75 level. So you're going to be watching for that level today. If it gets taken out and you're short, that is certainly not the message of the markets, because that says the ES mini will at least run to the highs. I say what it will do is it will go ahead and take out those highs. Of course, the market doesn't really give a darn about what it is that I say. But if I take a look at the message of the markets that I'm reading, the ones that last week said we're going to have a choppy market and the markets are going to form a bottom sometime this week and then take off for the rest of April out there. Well, all I'm doing is just elaborating those comments and giving you some price targets. And those price targets, once we see the ES mini get above 2110 out there, that says 2174 on its A to B equals CD. Sounds to me like pretty much what we came up with as a consolidation move as well. That consolidation break above that 2109 level. That is the message of the S&P futures. If we go take a look at the Dow futures out here, Dow futures on their daily contract, they've got some resistance up above at the 17,860 level. That's your TAS market profile resistance area. Let's get rid of the retracements out here. Let's go take a look at its A to B equals CD to the upside. And that says that once price closes above 18,188, that next move is going to be 18,853, most likely 19,209. I expect that these levels that we're taking a look at, that these are the minimum levels with regard to where price is headed to between now and May out there. Maybe it goes further. But that is what it looks like inside the markets when we take a look at the daily contracts for the futures. If we go take a look at what's going on inside the currency market out here, if we look at the King, let's go take a look at the U.S. dollar index. Of course, this is nothing more than just simply a basket of 6 currencies out there. And so it's really all about what are those other currencies doing, more so than what is the U.S. dollar index doing. But nonetheless, let's take a look at it. It's right now priced right around 98.26. I've got a 10-minute delay on this, not because I want to set that, because I don't want to pay that $100 a month just simply to get just for 10 minutes out there. It's just not worth it when we can take a look at other currency pairs and so forth. What does it look like is going on inside of the U.S. dollar index? It's easier for me to come back and take a look at what's going on inside the euro, yen, pound out there. That makes it a whole lot easier. And then from there, you can figure out what's going on with the derivative, and that is the U.S. dollar index. It's these other currency pairs that control that. Now, let's go take a look at the euro as it relates to the U.S. dollar. Back 750 pips as we speak right now. This thing here, let me try to expand this up for us. There we go. Let's move this up. Makes it a little bit easier for us to take a look at. What do we know about the euro? The euro at this stage here is off of the bottom. Let me do this here. This is kind of confusing. So let me just go. Oh, I didn't mean that. That's not what I really meant to do. Let me. How the heck did I do? I know. Give me a second here. Sorry about that. I hit the wrong button. Where is it? What did I do? Where is that? Boy, threw me right out. There we go. Fibonacci retracement. Okay, it's back on. What I wanted to do was hide these buttons out here. Okay, so now what we're doing is we're taking a look at the 0.382 retracement, and that's where the euro has moved back to off of its lows out here from March 16th. So it makes a nice run. Let's see if there's any kind of retracement level that this thing hit on its way up. Probably the 0.618 area on its way up. Pretty close to the 0.618 retracement level off of a high out here that I'm taking a look at from about February the 3rd out here. So it makes a 0.618 retracement in essence, and then it's pulling back. Now, further pullbacks inside of the euro. Oops, come on, don't do this to me. Not on live air. Oh, man, I can't get rid of this. Come on. There we go. Okay. So now as we take a look at this, if in fact the euro is able to bust through this 108.25 level, then we're likely to see the euro pull back into the $6, 1.0685. That would be your 0.618 retracement level. It looks to me like that is most likely what the euro is trying to set up. That would, of course, put some more strength inside the U.S. dollar index. But it does look to me, it's right now, it's at a floor where you can flip a coin here because it's made the 0.382 retracement. What we can say is if we see any kind of move below this 108.25 level, that very likely we're going to see move to the 106.85. And that's where we will likely see an A to B equals CD to the upside setup inside of the euro. Then that will go ahead and put some weakness inside of the U.S. dollar index. If we take a look at the Japanese yen, the Japanese yen right now, it's trading out at 119.94. Let's go take a look at the yen we get back from this break because it has a confirmed Gartley buy pattern that it has set up here this morning. This is Steve Rhodes with TFNN. We'll be right back, folks.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. I'm seeing some pictures here of the what looks like the new Lincoln Continental has looks awfully similar to the Bentley, from the four-door Bentley from the outside, but that's just a quick view of it. In any event, we were talking about, or I mentioned to you, the Japanese yen out here. And we take a look at the daily chart for the yen. This thing has confirmed an A to B equals CD to the downside. It's also confirmed a Gartley buy. Now, Gartley patterns out here. Now, it's not a requirement. If you go take a look at H.M. Gartley's book out there, he's not the one that he does not require a 0.61A to 0.3. He doesn't talk about Fibonacci retracements out here. But if we take a look at retracements, nonetheless, they're great tools out here. And we take a look at the swing point from January 16th. We go from that swing point to this little high wave doji style candle out here on March 10th. What we will see, it's that price pulled back into made a 0.618 retracement. Now the exact number was 118.21 out there. We actually saw the yen move down to 118.33, close enough for our work. Now I'm going to go ahead and turn off the retracement so we can see that that's in play out here. And it looks like a hammer candle. Smells like a hammer candle. It's really close. That wick on top of the candle session from March 26 may be just a tad too much out there to be a hammer. However, it doesn't really matter because you've got this three-candle formation out here, of course, named after the one of the great generals in Japan that unified Japan, Oda Nobunaga. I don't know if I've seen Oda Nobunaga in the Tiger's Den. Maybe he's on vacation out there. But what I can tell you, it's made a three-river morning star pattern out here. That is bullish. You've also got the mere fact that it's also made a bullish engulfing candle that so far has engulfed 1, 2, 3, 4, looks like 5 candle sessions. This move here inside the Japanese yen is strong for sure. Strong bottoming formation. And we have the A to B equals CD to the downside. Your A point being that session high from March 10th. Your B point being the low from March 18th. The retracement up into March 20th. It makes a 1-to-1 A to B equals CD. Gives you the bottoming formation. So now what do you expect? Look, on any Gartley pattern, there are basically 5 outcomes that you're going to see. Those 5 outcomes being 3 retracement levels and then the actual 100% move of a move. That means getting back to the originating swing point out here. And if we take a look at it, right now we can see about the Japanese. Now, let me just expand this up a bit, pull this down. What you can see is off of the low out here, it's sliced right through that 0.382 retracement. We've got a wide-ranging bar. That tells you and I that the second level, that was your first level, that was your first price target. Target number 2 is going to be that 0.618 retracement area, and that is going to be the price point of 120.61, and then price will make its way on up into the 121.23. That's your 0.786 retracement level. Now here's the key. Once it does that, what it's going to actually do is it's going to be inside that swing point from March the 10th. And if we see it close inside that swing point, that says 122.02 will be the level where it should, because once you get inside a swing point, typically price will go ahead and test that swing point. Doesn't always have to, but typically it does. And then you've got level number 5 out here as far as the outcomes, and that sets up your large A to B equals CD to the upside. And that would give you a price projection of somewhere in the vicinity here of 124.50. So if we see the Japanese yen versus the U.S. dollar, if we see it go ahead and take out the 122.02 level, your price target becomes 124.50. That is what's going on inside of that currency pair. If we take a quick peek at the Great British Pound out here, let's go see what's going on with it. Now, the Great British Pound, this is the daily chart out here. This thing has a nice key reversal session out here on the trading session of March the 18th. Price is trading back in here. It's never really gotten any type of confirmation, any follow through after that key reversal session. In fact, if you were to look at the very next candle session out here, it almost all but eliminates that message. So what is the Great British Pound doing? It's a great question. I can't, at this stage here, what I would have to say is, let's just take a look at its price channel out here. And at this stage, just simply going to, here's approximate price channel for the Great British Pound. It's probably right about there. And at this stage, it would look to me like price is going to come down and test the bottom of that price channel. If we try to expand this up and push it up, there's the bottom of the price channel out here. So it says the TAS market profile support of 146.88. That ought to be tested. And likely we see a spike lower, testing the bottom of that descending price channel. That's what's going on inside the currency pairs. We get back from this break. We'll see how the market's going to pop. I do not expect it to drop, other than maybe a little bit of intra-session type stuff, and then the market will continue to motor on higher into the Motor City out there. Right now, we've got Dow futures. They're trading up a total of about 130 points or so. Let me see, 145, 140, 150. Do I hear 160 out there? We'll most certainly see 160. S&P futures up 12.5 points. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're up to the races. We got the Dow up 181, trade out at 17,894, S&P up 15 at 2,076, Composite up 36 points at 49.27, Russell 2000 up 8.5 points at 12.49, DAX up 164, FTSE up 27, gold's back 15, silver's down 31 cents, light sweet crude now up 11 pennies, leading the charge. The upside, well, we've got nothing but buyouts and consolidations. You got Auspex Pharmaceuticals. Let me see. This is looks like Teva's going to be taking them over. You've got Catamaran. That's a buyout out here. That's our combination. Same thing. You've got, we've got to find iCell, Cellular Dynamics. Is this Fujifilm Holdings to acquire them? Lots of merger activity going on across the, now how about Madison Square Garden? Let me see. That's not a merger, is it? That's just simply to the upside. That's up about 5% right now, 6% up, $4.50 out here. We haven't taken, so we covered the market, so you've got a feel as to what's going on there. And as we speak right now, we're getting confirmed signals of changes in trend across the board out here. That's inside the New York Stock Exchange. That's inside the NASDAQ Composite. And that is also the Dow is right on the border out here. So real close to seeing its price oscillator move above zero. Of course, all 30 issues could be the upside. Out here, I've got to take a look at that. But basically, the two that we need to see leading the charge out here, we don't care about those 30 stocks. What we care about is what's going on with thousands of stocks out there, such as in the Composite and the New York Stock Exchange. And I don't mean we don't care, but the reality is we don't really care. We want to know what's going on inside the wider swath of the market, and both of those are pointing to all signs moving higher out there. Now, no idea how the market's going to close at 4 o'clock. We're only 6 minutes into the cash market, but based on what we've seen taking across what we've been seeing going on in Asia, in Europe this morning, it'd be pretty tough for the U.S. markets to not close up towards their session highs today. And yes, as one of our Denners has said, it's off to the moon. It's off to the moon. That moonshot's going to last through at least the end of April out there. And that's what's going on in the markets. Now, let's go take a look at, we didn't take a look at the metals, so we covered the markets, general markets. We covered the currencies out there. Now let's go take a look at some commodities for you. Let's go look at Goldilocks. Gold is trading back at 1185 right now. Gold, what we know about gold is this thing has broken out of its descending price channel, and that level was tested. That is bullish. Now we're seeing that price move back. That's after making a fairly decent move off of the lows out here from March the 17th. Now, the question is going to be, where's that retracement level going to take us to? You know, there's a couple ways to take a look at it. Number one, you can take a look at that swing point, that all-important swing point from November 7th. Now, the low was not tested. Does that bother me? No, it doesn't bother me. What we're watching for is the top of that, which is at 1179 even Steven out here. That may be a level of support. If that's not the level of support, then you're looking for price to get down to about 1171.40. 1171.40 is your 0.618 retracement out there. If that level fails, then what would make sense is price coming back and testing the top of the descending price channel, as well as the 0.786 retracement level around 1158. I do not know. And I want to go take a look at the June contract. This is a continuous contract out here. So let's move over to the June contract, and let's go take a look at a shorter term cycle. That was the daily chart. Let's go take a look at what's going on inside of a let's say inside of a 30-minute time frame out here. So let's look at the 30-minute time frames. Let's see if we've got any A to B equals CD patterns or anything along those lines. What do we have? Well, we've got its TAS market profile, its most recent one we've seen. So on this 30-minute chart here, this is pretty good. We can use this as a it looks to me as a indicator as to what gold may be doing, right? So we've seen it come down, get close to that swing point high that we're watching. What we've also see here on a 30-minute chart is the highs. We saw gold make a nice, that's the 30-minute chart again. We saw it make a nice spike higher on March 26th with good volume behind that move, about 3,800 contracts out there. But that's not what's really important. When we take a look at these TAS market profile resistance levels, those are the red horizontal lines going across my screen, we can see that ever since that time period, and that was at about 4:30 in the morning on March the 26th, ever since that time period, we've seen that level hold as resistance. We have not seen any closes above those market profile highs out here. So what does that set up for us? That says 1190.30 is going to be a key level for us to be watching. If we go ahead and we use the 30-minute chart as a trigger point for a change in trend. Now, if price gets up there, and that acts as resistance and moves lower, we are then going to watch that 1183 area, and we'll continue to watch. I would say you just take a look at the 30-minute chart out here. You'd use as a signal any closes above the market profile high would be an indicator that gold has formed a bottom. And will gold form a the B to a C of an A to B equals CD leg? The answer to that unequivocally from Steve Osun is yes. That is what gold is trying to do. And now we're just trying to figure out where is it that it is likely to do that at. We just simply want to wait for some confirmation out here. That's what's going on inside of gold. If we take a look at silver out here, high O silver down 29 cents, trading out at 16.77. If we take a look at what it is doing on its retracement levels out here, we can see that silver actually stronger than gold. something to think about. Well, maybe not. Well, stronger than gold was it came off of the bottom, but the retracement that it's made thus far, it's gotten down close to the 0.382 retracement, which is, and that's of its last move off of the low out here from its trading session of March the 11th to the high out here on March the 26th at 1740. Right now, your 0.382 retracement, $16.58 as we speak. If it can hold that level, then it is setting up a huge A to B equals CD to the upside run out here. In the case of silver, that would give us a price projection. I'm not saying we have it. I don't know if we found the bottom here just yet. Pretty much similar to watching gold on that intraday chart as one potential possibility. But if this is it, then what we're looking at is not just a price move to 1877, which would be your 1-to-1 A to B equals CD. You're looking at 1935, maybe $20.10 in its next move to the upside out here, and that is inside of silver. With regard to light sweet crude out here, you've got light sweet crude trading out at $49 even, Steven, out here. You know, what do you do with it? What do you do with this commodity? Boy, I think you look elsewhere for other commodities to take a look at. You're better off, in my opinion, trading gold or silver versus light sweet crude out here. Really a consolidation, a lower end of the consolidation. I think when we take a look at light sweet crude, let's see where we're at with regard to retracements on the continuous contract out here as we take a look at that, because now we're going to take a look at long-term possibilities. Where is it? Should be right in front of me. There we go. There's the long-term chart. Let's what the heck did I do there? Okay. Let me put this on a monthly chart out here. I think it's the monthly. I'm just curious as to where we're at. So if we take a look at the monthly chart, yeah. As we look at the monthly chart, this gives us even a better picture than all that noise on the daily chart out. Let me get rid of this A to B equals CD pattern. We don't need to be looking at that. You can see no kind of reversal signal whatsoever when we take a look at light sweet crude. And that's really what you need to see. We're coming to the end of the month here. Tomorrow's the end of the month. Pretty unlikely that we're going to see any kind of bullish reversal. And what we do know is that price is trading below the 0.786 retracement level. Price is also trading inside that swing point from the month that began January in 2009. The top of that price point is 50.47. You're below it. This really says that the bottom ought to be tested, $33.20 out here. And that's more likely what it looks like versus the mere fact that light sweet crude has found a bottom. And that is what's going on inside of the three primary commodities. Well, we can take a look at the natural gas out here. Of course, in the case of natural gas, I think this is still the active contract. Maybe not. There's a let's see here. Maybe it's not. Well, let's just take a look at what natural gas is doing. That's okay. This contract's still being traded if it's not the front contract, and pretty much on par with what the expectation was. Let me go ahead and try to pull that chart up on our screen. This is following along the pattern that we have been expecting, that we have been watching for out here. Where is it? I think it's this slide here. Let me see here. Is that it? I probably should have had this ready. No, that's not it. Let me try this one. Recent. Is it the radio slides? Let me see. Here's natural gas. So here we go. So as we put this up on our screen, slideshow from current slide. Here we go. This is the natural gas contract, and really, it's not. It's now we could. This indicates that if the analog pattern, the historical analog. Now, this is when I say historical, I'm only referring to the last 11 years. That what we ought to see is some type of bottom come in right around. Not the end of next week, the April 9th. When's April 9th on the trading calendar? Somewhere right around there. That would be this bottom right here. I'm not so much paying attention to, whether it takes out the lows. But that's when we should see a bottom. Historically, cyclically, it is in the early part of April. In this case here, right around April the 9th. I don't have this thing tuned to the 2015 trading calendar out there. But you can see that the chart actually looks similar. The chart that we're looking at for natural gas looks very similar to the analog pattern of what the natural gas has done for the last 11 years. Do you think that's important information in order for you to trade this? I would have to say the answer to that is unequivocally yes. Right now, we've got the Dow up 241. The S&P is up 19 out here. If we take a look at the VIX index, she's traded at 14.25, below the 50-day exponential moving average, which is at 1551. That's downright bullish out there. And I know you're going to have people because it's March 30th and tomorrow's the 31st. And then we've got the the next couple of days, and there'll be lots of talk about window dressing and, so forth. Folks, when I gave you the signal last week on Monday that the markets were trying to form a bottom and the likely target was around Monday, Tuesday of this week out here, it had nothing to do with window dressing out here. It's very similar to what we're looking at with regard to what's going on inside the markets and looking at a simple analog pattern when we take a look at the natural gas out there, very similar. So this is nothing to do with the end of the month, end of the quarter window dressing out here. We've got all these markets that are pointing to higher prices, and April's going to be a very strong month out here. How strong, I don't know, but it's going to move. The markets are going to move higher through the end of April. That's what all the signals are in the markets as we speak right now. I'm willing to change when we see some other signals out here, but we don't have it. We've got across the board as we speak right now in the New York Stock Exchange, inside the NASDAQ, and inside of the Dow. The markets have now just changed back to absolute all-out bullish mode out there. Now, let's go take a look at some things that are struggling in the markets out here. Let's go take a look at the Biodelivery Sciences International. Let me see. What do they have out here? They're just getting crushed. Looks like some study as a result of some endpoint in a phase 3 study. But let's go take a look at this stock. Volume of 1.3 million shares to the downside. Where's this thing traded back into? Well, this thing broke out. Here's where it's trading back into. Let me go ahead and delete this off of my screen. Just let me make the screen a little bit easier for you to view. Let's not do that. Let's get rid of this. Let's get rid of that. Let's get rid of, we'll just leave, and we'll leave. Oh, I thought I got rid of that. There we go. Okay. So now let's take a look at it. What price is doing inside of this equity is coming back into an area where this thing broke out with big volume. So this had volume to the upside, a breakout in January 24th to be specific, 2014, 14 million shares to the upside. And that price point is right around $6.41. And it looks like that is where price is headed to inside a ticker symbol BDSR. As it blows apart a B point of an A to B equals CD to the downside, that only had 1.2 million shares, and that was the price point from December the 12th. So about 641 looks like is the magic number for ticker symbol BDSI. If we take a look at Mylan, MYL out here, Mylan NB announces commitments of secondary offering. All right, let's not take a look at it out there. So they're just pushing out some paper. You've got Can Fight Biopharma. They just announced some top-line results. Doesn't look like very good top-line results as this thing is moving to the south with volume behind its move. It's coming. This thing basically had no volume up until the trading session of November 18th. That was at a price point of $2.51. It could take apart that. It could take apart that level, but it has pulled back to a breakout area. But this thing was, I don't know that this thing even was traded, other than maybe pink sheets or something. There's no volume or anything like that inside this equity to speak of. CANF is the ticker symbol back prior to that November 18, 2014 level. Let's see, what do we have to the downside of any significance out here? You've got Adamis Pharmaceuticals. ADMP. Boy, we've seen some pharmas just blown apart here this morning. This thing also, look at all these things out here that, light, really no volume, no liquidity inside of this equity. You'd hate to be inside this thing. Today's got 343,000 shares as it gets dumped to the downside. Let's see if we can find some real stock. Let's go take a look at some things moving to the upside. How about that? We can find a real stock out here or two. Let's go take a look at Apple. AAPL is the ticker symbol. They come out with the watch pretty soon, do they not? Since I don't have mine on order, nor will I have mine on order, I guess I have been following. Nonetheless, you got Apple up $2, trade out at 125.27. Dow's up 259, S&P up 22. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's up 262, S&P's up 22 points, Composite's up 46. So, what do you expect from here? Okay, as each of you know, we've been calling for a bottom to form. We thought that it would form on tomorrow, on Tuesday. Instead, what it did was it formed on Thursday of last week. So now what you can expect, we've got a shortened trading week. The markets are closed for Good Friday, so we just have Monday through Thursday this week. Expect the markets to continue to move higher for the rest of the week. How high, I can't tell you, but but pretty much should at least get back to test their swing point highs out there, maybe even take them out. So expect that. Then we come back. And then what we ought to expect is a market that just kind of agitates sideways to higher up until the time period of April the 14th out there. And on April 14th, as as our man Z in the den called in last week, I think it might have been on Thursday, I don't recall, but he was pointing out the cycle related to tax receipts and so forth out here. And by goodness, he's right, because when I take a look at my schedule of understanding what the markets are doing, expect that on that April 14th period of when the markets because what they will do this week is continue to move higher. And then kind of like a jet flying through the air that needs to be refueled, we'll see refueling take place from the beginning of next week until that April 14th time period, and then expect the jet to totally be fueled and then take off like a rocket ship right into that May time frame. Probably is not going to be the sell in May on May 1st. Of course, I haven't looked at my calendar to see if May Day is actually a weekend or a date, but I can tell you right around May 4th, expect the markets to get a bit choppy out there. So that's what you should be looking at. I can tell you we have all signs pointing to a go. We take a look at the summation index for the Dow, for the composite, for the New York Stock Exchange. All of those are back in bullish territory. They're in control of the hands of the bulls out here. We'll see what they're going to do. Stay tuned, folks. Tom's going to be up with his Market Minute if you're off to start your day. Thanks so much for joining us here at TFNN. Otherwise, hey, stay tuned, because I'll be back with you for the second hour of the Trader's Edge. But if you're off to start your day, have a great one, and look forward to seeing you tomorrow morning.